Good evening, everybody, and welcome to the February 18th edition of the Market and Trade Update from John Locke in Locking Your Success. And I'd like to start out this week's update by taking a look at the NASDAQ in general and try and get an idea of, we'll take a look at the 5-year chart here and just take a look at where maybe our actual shorter term target might be for this thing. If we take a look at this last box range right here, we got, and I'm going to ignore this hard pullback, but if we just take a look at where most of the market bottomed out most of the time and kind of average it, we're looking at around 2200. If we take a look at about where it topped out, we're looking at around 2400. That gives us a 200-point box. And if you go with that, that would give us a target of around 2,600 on the NASDAQ. We're getting pretty close to there now. We'll hit that in another 15 points, and I don't think that that's a very far stretch for the NASDAQ because we know it moves quite a bit in a day. That said, if we go back to the daily level, I'm still of the opinion that we are extremely overbought here. It's very, very rare for the NASDAQ to go this high without having a 20-day moving average touch, and we still have not hit that. This just indicates the bullishness of the market. What happened last week, it did try to sell off a little bit, but man, as soon as it hit this trend line, it wanted to blast off again. The good news, or however you want to look at it, is that it did not actually start to break out to new highs. So, in other words, it really didn't follow through yet. So, we still got a good chance of this coming down and trying for a 20-day moving average touch. I'm still saying that that's very likely. Of course, an overbought market can continue to rise. It doesn't have to do anything, but I am still in the camp that the chart is very bullish and will eventually go higher, but before it does, I still think this thing's going to roll over and touch the 20-day moving average. This is going to want to take off again. The reason I went over the NASDAQ first is because I think this is going to affect what happens in the other indices. So let's go ahead and we'll take a look at the Dow. This is the only index that broke out last week. So if you're looking at, well, let's take a look back at the 5-year once again. Here is where we called a resistance area. It's tested it once, it's tested it twice, 3 times, and now 4 times. And finally, with this super bullish market conditions, we traveled sideways last week, came into our 20-day moving average and blasted off. We clearly had a breakout last week. And whether it holds or not is going to depend on if the NASDAQ is going to sell off, or if you'll see in a minute that the SPX and Russell are actually still under their resistance areas. So with the NASDAQ overextended, the other 2 indices in their resistance area, we'll have to see if this actually pulls the market up or not. More than likely, it's going to pull this back in the range. Let's take a look at the SPX. We also had a higher move in the SPX last week. Let's go back to the 5-year. We're more or less at the same resistance level as we were in the Dow. If you scan in on this, although the market was up last week, we are still clearly within this box range, and we haven't broken out yet. The SPX did have some sideways action. It never got down to its 20 moving average, and but the buyers did come in, and we went higher. Again, this I'm thinking the same thing here. We come back down, and I'm thinking this is going to be fishing for that 20-day moving average again. And as far as the Russell, we are very close to all-time highs in the Russell, and we are at a resistance area as well. Now, if we've come this high, I don't see any reason why we're not going to test these all-time highs. But again, I think before we do it, we're going to see this trend line down here. And that's going to happen when the NASDAQ backs off. It remains to be seen. So, in short, the charts are all extremely bullish. They are also overextended and due for a rest. So I'm still under the feeling that we're going to get a rest, and then we're going to continue higher. So I'm shorter term bearish, longer term bullish, and that's the way I see things. I know that's a little ambiguous on direction, but we have had an extremely long run, and we're more than overdue for down movement in the marketplace. Okay, I just quickly like to talk about the February trades, and we had the bearish butterfly, which took a loss. That is because it is called a bearish butterfly, and we have a market that has just been straight up for the last 5 weeks. It's if we go to a weekly here, the last 5 weeks, 1, 2, 3, 4, and this settled back a little bit. But this here was enough to put the bearish butterfly out because it was just continuous up ground. It doesn't like that for 5 weeks. And when this happens, being a somewhat bearish trade that will take a lot of up movement, but being a little bit bearish, it will take a loss. Now, I've been asked, well, geez, doesn't that upset you that you've lost a trade? And in reality, no, it doesn't upset me at all. This is a trade that handles most market conditions extremely well, and I haven't lost this position. Well, let's put it this way. The position, I have a win-loss rate on it of about 83%, which means I'm going to win 83% of the time and lose about 17% of the time, which translates into 10 wins and 2 losses over a period of a year. On average, of course, past results do not necessarily equal future results. But I can say that I haven't had a loss on this trade since 2010. So it was way overdue for some sort of a monthly loss. And like I said, this doesn't concern me at all. Even if it were to lose March, because of this extremely bullish market, that wouldn't concern me either. Like I said, it's just a normal part of trading, and you need to accept your losses and know that over time that the percentage of return on the trading system you're doing, if you know it well, you'll know that percentage of return. But with this trade, it's very good. And I'm looking very forward to April, because if the market continues to get overextended, April most likely will turn out to be a very good month. And I can tell you some of the best months I've had with this are either very difficult months or times when the trade has lost either once or twice. And a lot of times the third month you get what I call a bonus month, where you make a lot of money, and it all evens out over time. And I would tend to keep that in mind in most of your income trades. And as far as the method 3, I actually ended up pulling out of that. I believe it was this day here, which would be Tuesday. No, I think it was actually Wednesday. Hold on, let me take a look at my blog and see. Okay, it wasn't February 15th, it was Tuesday, which was the 14th. I posted on the 15th, and I pulled out on the 14th, which was actually this day right here. If you remember, the position looked like this, and we were looking for the market just to make just a normal retracement back here into the 20-day moving average, which would be like right around 800. And at that point, we would have, if it happened anywhere near expiration, we would actually have been able to pull a profit out of this. And if it was a little deeper than expected, we would have definitely pulled a profit out of this. But we gave the market every chance to do so. There were a couple of days before expiration. It was fairly obvious the market just didn't want to sell off. So we just took a loss of about $650, which is less than the maximum loss in the trade, and closed it out, and we're looking forward to March. Again, this here is a trade that wins, on average or in the past about 10 months out of 12. It had a loss last August of 2011 in the crash, but other than that, this thing hasn't lost, and before that hadn't lost over a year. So again, completely expected, not a big deal, and we're moving on to March. Part of the reason this one lost in general, it was definitely a winnable trade this month. And in fact, probably more than half the students that traded it won the trade. and I only had a couple that lost. So for the most part, people won this thing. They stayed up on the market a little bit better than I did this month. Like I said, when we were trading this earlier, I was more or less counting on the 820 resistance area holding. It did not. And since I was positioned for it to hold, then I ended up taking, and the market just never backed down on us for us. Then we ended up taking a less than maximum loss on it, but a loss nonetheless. Okay, and let's go into March.